Today, we are discussing rollovers for business startups, or ROBS. In short, ROBS will teach you how to use your retirement funds, tax-deferred, penalty, and debt-free. This innovative resource has become the fastest growing form of funding to help someone start, acquire, or grow a business. Two ROBS experts have created a series of comprehensive educational videos to help you become an educated and successful entrepreneur. The first, Larry Carnell, is the National Award-winning Entrepreneur of the Year, business and franchise expert, and Vice President of Benetrends Financial, the company that discovered this legal pathway in 1983. Carnell is recognized as one of the country's foremost ROBS experts and is credited with helping introduce this creative funding, wealth-building protection program. Joining Carnell is CPA Gary Bodie. Bodie holds a master's degree in accountancy and is considered a leading national expert on ROBS structures. He is also a business lecturer and contributing author on ROBS and C Corporation structures, which can help maximize your exit strategy benefits while minimizing your taxes. In addition, Bodie runs his own practice where he advises and works with entrepreneurs with ROBS structured businesses across the United States. What are the pros and cons of ROBS?
Sure. Your ROBS setup provider will set up a company retirement plan through the Department of Labor and also a C corporation in your state. Then you roll over your current retirement funds into the company retirement plan, modify a few things, and then you're able to take that distribution and use it to buy shares in a C corporation, which of course you are the shareholders for. Anything past that, Larry?
Well, that's pretty much it. You're investing in the stock of your own company. So it's technically not a distribution, it's a rollover. And so what's happening at that point is that you're
tax-free
investing into the stock of your own company. That money ends up in the checking account of your corporation. In return, the corporation gives the retirement plan, let's say $100,000, $100,000 worth of stock. So it's still a retirement plan investment. So people often worry, well, I'm using all my retirement funds. It's still a retirement plan investment. But instead of investing in the volatility of the stock market, you're investing in the stock of your own company, which a lot of people like having better control. We have no control of what happens overseas and impacts the stock market, but you have a lot more control over a business that you own and operate.
Do you typically suggest that people take out all their retirement savings and put it in there? Because their C corporation can do anything with the money that their current financial planner can do.
Well, in actuality, it's dependent on the preference of the candidate. Sometimes they'll combine their retirement funds with bank financing, but some people don't like having a lot of debt. So a lot of people will use their retirement funds and not borrow any money. They have zero debt. Of course, from a pros and cons standpoint, one distinct advantage is by reducing debt, you significantly increase your potential for success. According to a 20-year study by the Department of Labor, 50% of people that started a business using primarily debt-related vehicles were often out of business in 5 years. But people using their retirement funds with zero debt—
About 90%, right?
Yeah, significantly higher. But the other appeal is that because they had no debt, they had more money for marketing and advertising, which significantly increased first-year revenue. And with any business, you have fixed expenses. You don't make a single dime of profit until you exceed the break-even point. So anything that you can do to accelerate past that point increases first-year profitability, and that's what was found.
Plus you're using your own retirement funds, which is a great incentive to do a good job.
Correct.
Okay. You really need to use a ROBS setup provider. This is not a do-it-yourself project. And here's some benefits that I think that the ROBS has over any other type of financing. One is that you're funding your business with tax-free money, and that you have less initial service debt, which helps during the first year. Most companies that go down in their first year because of their cash flow. And so I think in my experience, I've seen my ROBS corporations gain traction faster, become profitable faster, and people have less stress. I know that's not a financial matter, but it's a big deal to them. And I think a lot of folks don't even realize that there's advantages to using a C corporation. One of the questions I always get is, how can I do this without being a C corporation? But there are actually quite a few benefits to being a C corporation, and they'll also ask, how can I become an S corporation? And frankly, I think once you're set up, you're probably using the C corporation vehicle until you sell the business.
Yeah, especially as you progress in age and with some potential tax changes, I think C corporations are going to become extremely popular. They're already becoming popular because of this program, but we'll talk in a later video specifically about advantages of C corporations versus other structures, especially if you're moving into your 40s and 50s.
And I found that a lot of CPAs, because of the long lag when the S corporation came in, don't have a lot of experience with C corporations anymore. You'd have to go to probably a mid-sized firm to really find somebody that was really fluent in C corporation tax preparation.
Correct, and of course there's some other advantages as well in regards to wealth protection and appreciation of the business. Can you address some of those issues as well?
I'd like you to take the wealth protection because you're pretty much up on that.
Well, I believe the fastest growing erosion of wealth in America is healthcare related issues. Personal liability risk, in my opinion, are often even greater than business liability risk, especially as we progress. There's no longer a concern about surviving a major health related issue. The big concern today is surviving the cost of surviving. When you structure a business strictly with cash or a bank loan, the business becomes a personal asset. All personal assets, regardless of whether you're incorporated or not, people often are misled about the advantages of incorporation. But incorporation gives you business liability protection. If you do something in your business, they can't come after your home or personal savings. But if you have a personal liability issue, such as health care or an auto accident, they can come after any personal asset, including the business, its assets, and income. However, when you structure a business, even using part of your retirement funds, it becomes a federally protected asset as a retirement plan. And that is very important, especially for spouses. In America, the typical husband is 2 years older than their spouse. Women tend to live as much as 4 years longer. So there's often a 6-year spread between the death of the husband and the passing of the wife. And so they have to make sure that that wealth is protected to maintain their standard of living. And if something happens to both of them, that wealth can go to the children. Parents love having a way to pass their wealth on as a legacy to their children rather than some creditor. The other big advantage is the protection of appreciation. Let's say you buy a business for $100,000. A few years from now, you're making $150,000, $180,000. You got a business that's worth over $500,000. The problem for most people is when you go to sell that business, that appreciation is subjected to an immediate federal tax issue and often state income tax. That's not the worst part. The worst part is after the government, the state comes in and takes their share, the net proceeds are forced into an unprotected checking or savings account. When that happens, you've literally painted a giant red target on your back for future creditors. Conversely, with this program, a custom design firm can structure a program in such a way that when you sell that business, you can take 100% of that appreciation before a single dime in taxes are taken out, use that money pre-tax to go buy a bigger, better business, or move all that money into the retirement plan where it's protected for the rest of your life. Okay. Now, I believe the biggest advantage, we all want a rich uncle that will help us start a business. Well, guess what? We're all first cousins. We all have the same uncle. His name is Uncle Sam. And when you use retirement funds, normally if you were to take out $100,000, it could push you up into the 33-35% tax bracket.
Plus the additional tax on top of the 10% penalty.
And on average, there's a 6% state income tax on average. Some states have more. California's up to over 13%. So you could be literally losing as much as 50%, sometimes more, of that money. With this program, Uncle Sam allows you 100% use of that money. If for any reason the business doesn't make it, you probably lost 50%. Even though you got 100% use of the money, you never have to pay the money back. So a lot of people like having a rich uncle that will help them support that business, and it reduces the fear and anxiety of starting a business. It's one thing if you have to put your home up for collateral. You could borrow $100,000, but you could put up $150,000 worth of equity in your home. You've not only adversely affected your credit score, but if something happens, you've ruined your credit score, and you could end up losing the roof over your head. It's one thing to lose some money in a retirement plan. It's something else to lose the family nest or the home. And for that reason, a lot of people like that feature.
There are a few downsides to ROBS, depending on, I guess, how large your dream really is. And those include, there's the ROBS setup provider fee, and also the ROBS Corporation needs some regular maintenance, which we'll discuss in a future video. But what would you say the break, I know that you think that the break-even cost is zero. I've calculated at 28%, and some other CPA has done 50%, or 50,000 rather. Why do you say that it's zero?
Well, oftentimes with any type of fee, it's not what the fee is, it's what you get in return. Historically, now some programs qualify for this, some don't. But if it's a professional provider that's doing it properly, it's going to include all your legal, administrative, state filing fees to incorporate the business, the minutes, the bylaws, the issuance of stock. So you're not having added cost hiring an attorney or a CPA to do that. That's part of a ROBS provider's process. Plus, one of the concerns that the IRS has is making sure there's an independent third-party evaluation. It's not just having any type of evaluation. You have to have one that's properly done. That was a concern voiced in the IRS alert memorandum. And having a firm that does it properly, that can be worth quite a bit of money as well.
That means that you have to have certified professionals on some of these aspects. Yeah.
The big advantage right now, at least with our types of plans, not all plans qualify, but our plans are fully tax deductible and qualifies for tax credits. The combination of the support services, the tax deductions, tax credits often zero out the setup cost. Now, a lot of programs also have ongoing administration fees. There's currently federal tax credits, $500 per year for the first 3 years, and the fee itself is tax deductible. More importantly, most providers provide the annual fair market valuation. People are having to spend as much as $2,000 per year to have that done. So when it's provided, that single service will totally pay for the $130 per month fee, but you also have a service that provides your reports and all these other things. And oftentimes, I always encourage people to ask about the other support services, because there's often other support services that can save clients hundreds, even thousands of dollars.
Yeah, clients ask me all the time if I want to take over that duty, and I have to explain to them that there's a lot more to it than it seems. And I always advise just staying with your ROBS setup provider, that average $150 for what they're paying is really a pretty good deal for the most part.
The biggest con is you're risking your retirement funds. And what's your opinion of that?
Well, the worst case scenario, and why everybody I think is so anal retentive about ROBS, is that the IRS can rescind the ROBS transaction retroactively. So here we are in 2018, let's say in 2021, I get audited and the ROBS company shuts down. Now this is the extreme case, but then that ROBS transaction becomes retroactively taxable, plus the additional tax, plus interest and penalties.
If it's not set up properly.
If it's not set up properly, and obviously that would probably bankrupt any company or any individual.
Oh, absolutely.
It doesn't really happen. Never really heard of that happening, but that is the worst case scenario.
Well, there are some case laws out there where people have had them improperly structured or maintained and had to spend hundreds of thousands of dollars. The best protection you have for that is making sure you're dealing with a reputable firm that guarantees in writing specifically that they'll cover any fines, penalties, or interest charges. What else have we not discussed at this point?
I think that we're pretty good on that.
Well, the key thing, one of the issues that I think is important to understand in regards to risking your retirement funds, this is an investment no different than investing in Walmart, IBM. The same way that you would ask yourself, am I investing in the right business in your retirement plan? You have to ask the same question of yourself. Is this a business that I believe has a greater potential return on investment and income over the stock market? If not, you should not buy that business. You should not borrow money. You should not use your savings, any of that. This is strictly a prudent decision through research and development, working with professionals such as Gary or advisors to help you find the right business. If you believe that it's the right business, then it makes sense to invest in this business the same way that you'd invest in a mutual fund or Walmart or any other company. Well, our next video will be ROBS 3, choosing a ROBS provider.
Okay.
Thank you.